past 10 o'clock here in Sydney. So we'll get started with today's webinar. Let plenty of people come in as I start talking, but we'll get started in the interest of time. So welcome everybody to MLA's Cattle Industry Projections September Update webinar. Today we'll be discussing the content of the September 2025 projections update, which was released yesterday. Thank you again very much for attending this morning. My name's Jack Johnston. I'm the Corporate Affairs and Media Manager at Meat and Livestock Australia, and I'll be the moderator for today's webinar. The team presenting today is Erin Lukey, who's the Acting Market Information Manager, Emily Tan, Market Information Analyst, Emiliano Diaz, Market Information Analyst, and Tim Jackson, our Global Supply Analysts. I'll pass over to each individual members of the team now to give themselves a brief into their bio. Erin, can you please kick us off?
Hi everyone, Erin Lukey, Acting Market Information Manager. I have been with MLA for coming up on 2 years now. A lot of what we do in the market information space is focusing on the supply and demand dynamics of red meat, so beef, sheep meat and goat, and focusing on kind of these dynamics before the processor. But yeah, I'll pass on to Emily.
Yeah, so hi everyone, my name's Emily. I'm the Market Information Analyst. I have also been with MLA coming up to 2 years, and I previously used to work for Woolies in the category development team.
Emiliano?
Yeah, thanks. Hello everyone. Emiliano Diaz here. I've been an MLA for 4 years, but I'm the newest team member for the market information team. I was in the consumer side of the business. Now I've been like 1 month with the team. I look after also live eggs and the goat industry as well. Yeah, Tim.
Hi everyone, Tim Jackson, Global Supply Analyst, and I've been at MLA for about 3.5 years, maybe a shade over now. And most of what I do, alongside handling all of the export data that we have and kind of questions and insights around that, is look at what's happening overseas in terms of other countries' kind of production and supply dynamics and what that means for the global market, and then what that means for the Australian red meat industry and beef specifically.
Thank you, everybody. The team's contact details will be made available at the end of the webinar. If you have any supply, price, production related inquiries, please reach out to any member of the team and they'll be happy to assist. Any members of the media will feel free to reach out to myself and likewise be able to get in touch with the analysts. Before we kick off proper, I'll cover just a couple of housekeeping points with today's presentation. As you'll all figure out, all participants will be on mute and their cameras turned off throughout the presentation. There will be allocated time for questions at the end of the presentation. Feel free to enter your questions at any time throughout the presentation by scanning the QR code, which will be present on each one of the slides, which will take you through to a Slido page where you can ask those questions. Please note that this webinar is being recorded and a copy of the recording will be uploaded onto Meat and Livestock Australia's YouTube channel and website following the conclusion of today's webinar. So without further ado, we'll get started. So MLA's industry projection reports are a long-standing initiative offering the Australian red meat sector valuable insight into the key factors shaping the industry over the short to medium term. To kick us off, Erin, could you please provide an overview of the projections process and how the forecasts and assumptions are developed?
Sure thing, Jack. So the market information team has been producing this document for a bit over 2 decades to help support industry from processors to producers, exporters and retailers, so right along this supply chain. The document includes a forecast out 3 years of the national herd, slaughter, production, carcass weights, export volumes and also live export. And this in this case goes out to 2027. We publish twice a year, so first off in March when we get calendar year totals from the ABS slaughter and production data, and then an updated format in September when we get the financial year slaughter and production volumes. These forecasts are initially generated through MLA's modelling, which draws on a range of different data sources, including ABS, ABARES, peer-reviewed research by the University of Queensland, and then a lot of MLA's own data sources like the Beef Producer Intention Survey, as well as our weekly slaughter surveys. A really important part of this document is incorporating industry consultations alongside the modelled figures. So over the past month, the market information team has met with producers, processors and exporters across the country to gain an informed understanding of the current climate and future supply outlook for the sector. And this is an essential part when we do any adjustments to the modelled output for us to get like a real on-ground perspective. And we thank those stakeholders for year after year engaging in those consultations. We hope this process and this document provides industry with a clear outlook on supply and demand trends, as well as Australia's position in the global beef market.
Thanks for that background, Erin. Can you now please tell us what the key drivers of the figures in this document are and what changed from our initial assumptions done in March this year?
Sure. So back in March, MLA reported a relatively strong outlook for Australia's beef sector, which was driven by stable production and strong global demand. Back then, early year data and climate outlooks and insights from industry consultations pointed to measured growth impacted by processing capacity, but also concerned around delayed wet season outcomes up in the northern part of the country. Now, 3/4 of the way through the year, our March expectations have shifted. They've changed pretty significantly. And a big part of that was the data that came throughout the year, but also stakeholder consultations revealed a couple of key insights which did result in moving those numbers. Firstly, one of those consultation insights was that current turn-off from production volumes are expected to remain strong out to the end of 2025. The supply seems to be there and ready to go across both grass-fed and grain-fed systems. Secondly, the influence of the South Australia and Victorian destock or rebuild. While some regions have been hit by really intense and harsh conditions, it's likely to have a smaller influence on the national figures due to the strength of most other cattle producing regions kind of combating those outcomes. And then finally, traditional data measures such as female slaughter have moved away from longer term trends. This did keep coming up throughout our conversations, and that has resulted in, I guess, us coming to this high level turn off, but also the herd remaining relatively stable. There are also a number of key drivers which have remained consistent from earlier this year and across the last couple of years, including weather, productivity and demand. Weather, productivity and export demand. The team will go through some of these in more detail. So Emiliano, one of our analysts, will take us through how the season has played out so far in 2025 and then what assumptions, including weather and beyond, we have used in the forecasting process. Then productivity trends are pointing towards unexpected capabilities. So this year, slaughter production are expected to reach records or near records, and the herd is expected to remain stable. So my colleague Emily will cover our forecast numbers in more detail and then how we have improved our turn-off capability. And then, as always, export and global demand remain a significant driver of the market. Global demand for beef is strong, and Australia is well positioned to supply and compete with that on the global stage. So Tim Jackson will cover some of the more influential global dynamics which will impact that total demand for Australian beef.
Thanks, Erin. Moving through, MLA compiles a number of assumptions covering things like weather outlooks, financial considerations, cost of inputs and regulations. Starting off with the weather and moving on through to the economic outlook and beyond, Emiliano will take us through the major assumptions which will impact the projected outcome for the cattle sector.
Yeah, thanks, Jack. Let's start with weather. which is still the biggest driver for herd dynamics and production volumes. As Erin mentioned, the MLA projections utilize a peer review model developed by the UQ, and this model has a weather input. And historically, we have assumed like a cyclical season outcome based on historical patterns. But now, as we enter on our fourth positive year from a national level, this cycle no longer applies. So we have shift our assumption, and we are using BOM's 3 months forecast through December, and then assuming an average seasonal condition beyond that. That said, the spring outlook brings short-term optimism, as you can see in the map in the right-hand side. Much of the East Coast has a 75% chance of above median rainfall. So for regions like Victoria, South Australia, and the south of New South Wales that hit hard by 18 months of poor seasonal conditions, this could be a turning point. And if these rainfall are consistent, it could support pasture recovery and water availability, potentially kickstarting the herd rebuild earlier than expected. In the north, a delayed but effective wet season has helped maintain the herd number and productivity. And as you can see in the map as well, there is a positive forecast ahead, so producers are well placed to benefit from improved surface water and soil moisture up there. For Western Australia, the average rainfall is expected to sustain stable output in there. So it's important to know that as weather is largely driven by the forecast could change, and depending the weather, and depends on the weather outcome. So this is why we update our forecast each year to ensure that the most accurate figures. Next slide, please. So moving to the financial assumptions, interest rates continue to ease, with the Reserve Bank lowering the cash rate to 3.6. This offers a relief after a long stretch of tight monetary conditions and should support borrowing and investment across the sector. Meanwhile, the weaker Aussie dollar is boosting the competitiveness of beef in the international market, especially in the US and North Asia. On the input cost, they remain a pressure point. We assume that. So ABS latest data shows that electricity, for example, have risen 17%, driven by the wholesale energy cost and upgrades that they have done. But on the upside, the diesel prices have dropped 8% year on year, and they sit 13% below the 5-year average. So this offers some relief to transport or machinery operations. Despite inflation is 2.1% at the moment, and is sitting at the bottom of the Reserve Bank target range, imported inputs remain expensive due to the low exchange rate, so it keeps the overall production cost quite elevated. Lastly, labor and regulations. Starting with labor, the pressures have eased as well, thanks to the widespread use of visa schemes. The PALM scheme in particular have been essential for the processing sector, helping fill long-term roles and stabilize the workforce availability. On the regulatory front, producers continue to face increased regulatory loads, such as land use, environmental compliance, biosecurity, animal welfare, or transport requirements, all add administrative and financial pressure across the supply chain, which should be considered as an additional cost of compliance. So we take all these factors in mind when we do our forecast.
Thanks, Emiliano. Turning now to the outlook for Australia's cattle herd and production. Emily, can you please give us an update on the herd numbers?
Yeah, absolutely. So the Australian cattle herd is projected to have eased slightly to 31 million head as of 30 June 2025. That's 0.2% down following an increase of 1.6% in 2024. Herd numbers are expected to remain relatively stable through 2026, sitting around 31 million head before easing by 2.2% to 30.3 million head in 2027. The 12-month rolling average for female slaughter currently sits at 53%, well above the long-term average of 47%. This reflects how the herd has structurally shifted, with a larger proportion of females in the national herd. That change has been supported by more targeted culling, with producers increasingly turning off older, unproductive females while retaining their core breeding stock. In 2025, strong conditions in northern Australia are supporting higher stocking rates, while drier conditions in the south are prompting producers to reduce unproductive cattle and hold on to breeders. The northern regions continue to operate near optimal capacity, partly offsetting herd reductions in the south. Looking ahead, the herd will remain stable in 2026 as producers start to rebuild cautiously, while elevated slaughter driven by demand will result in the herd easing by 2027.
Thanks, Emily. What does this mean for slaughter numbers over the forecasted period?
So for slaughter, it's expected to increase by 8.6% in 2025, reaching 9.02 million head. This is supported by the strong cattle supply and robust processing capacity. Genetic improvements, pasture development, and feedlots have lifted turn-off capabilities. Cattle are being processed younger, background steers are moving more quickly into feedlots, and fertility gains have created a more efficient replacement system. Looking forward, slaughter is forecast to ease by 3.3% in 2026 to 8.72 million head, and by 2027, lower herd numbers are expected to weigh further on supply, with slaughter falling by 4.4% to 8.3 million head.
Now, what about carcass weights and production? How are they tracking?
Yeah, so carcass weights are expected to remain stable in 2025, averaging just under 310 kilos. While elevated female turnoff normally brings weights down, strong grain-fed numbers and good autumn rainfall has supported pasture growth, and that's helping that maintain stability in carcass weights. In 2026, carcass weights are expected to reach 312 kilos and lift further in 2027 to just over 320 kilos. Moving on to production, in 2025, it's forecast to reach 2.79 million tonnes, up 8.7% on the back of strong slaughter and stable weights. Over the following years, production will ease as slaughter comes down. In 2026, volumes are expected to dip by 2.6% to 2.72 million tonnes, still the second highest on record, and by 2027, production is forecast to fall a further 1.8% to 2.67 million tonnes.
So if we move on to the key macro issues impacting the sector, Emily, over the past decade, Australia's cattle herd has changed shape quite dramatically. Can you talk us through what this means for producers?
Yes, absolutely. So the herd looks very different from what it did 10 years ago. And a lot of those changes are reshaping how producers think about stocking rates and turn-off numbers. And I think this is why the herd has been able to sustain such a high turn-off rate. Back in 2014, calves made up about 23% of the herd, and by 2024, that figure has lifted to 31%. This shift has been driven by more productive breeding cows and investment in genetics, which has lifted the number of replacement heifers available. And this means that producers are able to maintain a breeding capacity and continue to improve their herd performance. If you look at the Beef Producers Intention Survey, this certainly supports that trend. 39% of producers say that they plan to adjust their herds, and 17% are looking to move towards a more breeding focused system. A larger calf population brings a lot of opportunity, but certainly comes with its challenges. Calves selected for faster growth will reach market weights earlier, and this can lift carcass weights. But as they consume more feed, this puts pressure on carrying capacity, and this is really important for pasture-based systems. Meanwhile, the proportion of older cows and heifers has remained relatively stable, while the share of meat cattle has declined. This obviously reflects the higher turnoff rates, shorter growth periods, and greater use of feedlots. Grain-based rations are reducing the reliance on pasture, and in some cases can act as a buffer during dry periods. The key for producers is balance, managing stock rates to match feed resources, culling unproductive cows, and turning off surplus heifers early. With more calves moving through the system, careful decisions around feed, demand, turn-off timing, and grazing pressures will be crucial, and shows how the herd is capable of increased turn-off with a smaller and more productive breeding herd.
Thanks a lot, Emily. Moving on now to always a key conversation, live export. Emiliano, can you please run us through the live export projections?
Sure, no problem. So live eggs are expected to remain relatively steady in the short to medium term. We anticipate a modest 2% increase, reaching to around 8,001 heads by the end of this year, with a similar level likely to continue into 2026. So there are a few factors that contribute to this moderate growth. First, while the North is experiencing favorable conditions and the cattle supply is solid, strong global demand for beef continues to support domestic cattle demand, and with the international appetite for beef expected to remain firm, it will be likely to the Aussie beef and cattle to continue strong in the next few years. On the demand side, the economic recovery in some Southeast Asia countries has been a bit slower than we expect. For example, in Vietnam, consumer spending has been somewhat constrained due to the domestic and international economic challenges, which has affected overall consumer confidence. And at the same time, the live trade sector continued to face increasing competition from regional suppliers, particularly where the cross-border cattle are being offered at competitive prices in that market. Indo remains the key market with stable demand. Although consumer purchase power is still rebuilding, the preference for fresh beef, and in particular for Aussie beef, has helped to sustain the trade volumes. Additionally, government programs aim to strengthen the domestic beef and dairy production. So these programs are expected to support demand for breeder cattle over the next few years. And it's a trend that we already start to see this year with record volumes of breeders going to Indonesia. So Australia is well-established relationship with Indonesia, and the role of cattle play in contributing their food security will remain important going forward in this market. And then we have China with a subdued demand due to the dairy sector struggling. And at this stage, there is no signs of major shift in the short term for this market. So overall, based on the information and the market intelligence currently available, we expect continuous and strong demand for Australian cattle. However, the growth is likely to be a bit moderate pace, influenced by the broader economic and competitive conditions across the key markets.
Thank you very much, Emiliano. Just a quick reminder to the attendees today to send in your questions using the Slido link. You can access it via the QR, which is present on the QR code, which is present on each of the slides. Moving on now to global supply. So Tim Jackson, our global supply analyst, will walk us through some of the big trends in the global beef market and what they mean for Australia. So firstly, Tim, we'll start with the overall trading environment. Fair to say that the landscape has changed over the past year. What are your headline figures?
Thanks, Jack. There have been a few shifts over the past year or so that have changed how the market operates a little bit. Stepping through them, the first is actually a reflection of what's happening in Australia, which is that we're producing more than ever before, which means that we're exporting more than ever. Last year was a record year for beef exports, and this year is set to beat that record comfortably. That's a good thing for the industry. It means that our export income is higher, and it presents opportunities to build market share while our supply is strong. At the same time, it presents logistical challenges, especially when our free trade agreements feature these things called safeguard quotas. We've already seen this start, and it poses a challenge for exporters, if nothing else, from a logistical standpoint. Beyond the domestic supply situation, we've seen some movements in tariff levels, with the US imposing a 10% tariff on Australian exports into the US market, including beef. At the same time, the Ministry of Commerce in China has initiated a safeguard investigation around beef imports, which is due to report in late November. Finally, there's been movement in terms of Brazil's disease status. As a major beef producer and exporter, that has the potential to allow the introduction of Brazilian beef into some parts of the world that it previously lacked technical market access in.
So we step through these one by one, just in a bit more detail. First off, let's talk about the challenges that come with high export numbers.
Essentially, as our exports are reaching their peak, we're seeing some beef safeguards being hit earlier than normal as increased supply triggers them faster than usual. The two important ones to discuss here are the beef safeguards built into the free trade agreements Australia has with China and South Korea. The beef safeguard in the Australia-China FTA was triggered on the 24th of July, which raised the 0% tariff we pay on exports to 12% for the remainder of the year. This is notable because in 2024, the safeguard limit was actually reached in early October. So this year, it's been over 2 months earlier than that. The safeguard in our FTA with Korea hasn't been triggered yet, but as of the start of this week, we had utilised 95% of the quota and are likely to reach 100% in early September, so sometime early this month. When this happens, it will shift the tariff we pay on exports to South Korea from 8 to 24%. This isn't a new problem, and exporters have been dealing with them for decades, which is important to keep in mind. At the same time, it does pose some logistical challenges for exporters. Shipments planned for the end of the year might make more sense going into cold storage or being diverted somewhere else, and there's an additional cost for exports. So all up, it's not a huge issue, but it does add a layer of complexity for exporters to deal with for the rest of the year.
So briefly, let's walk through what's happening in China.
So essentially, in late last year, a group of domestic Chinese beef producers sent a petition to the Chinese Ministry of Commerce, which led to the initiation of a safeguard investigation into global beef imports. Since then, the investigation has been ongoing and is currently due to report in late November. Over the course of the investigation, the Australian red meat industry has been an active participant, and the industry has been promoting the importance of ongoing trade during the proceedings.
Thanks, Tim. Now, what's happening in the US, both in terms of trade and their own supply situation? Sure to say it's been a point of conversation this year.
So, on April 4th, the United States instituted a 10% tariff on all goods imported from Australia, including beef. This has not put Australia at a competitive disadvantage, but instead the main effect has been to increase beef prices for American consumers. While the US tariffs have received a lot of attention, the most important thing to consider when we're looking at the US at the moment is the state of the American herd and what that suggests about future American production. So on the production side, the US herd was reported at 86.7 million head at the start of 2025, which is about 500,000 head below January 2024 and the lowest figure in 74 years. This is the product of a sustained herd destock and has led to elevated beef production in the first half of the year. Since then, there have been some signs of recovery and of a potential herd rebuild. In particular, the number of heifers in feedlots has fallen markedly over the year. This is a really important signal for the direction of the herd, because a heifer that doesn't go into a feedlot is likely to be a heifer that will be kept on farm and used as a breeder. What this means is that beef production is likely to fall over the coming months and years. And beef production has fallen markedly since April, as fewer heifers enter feedlots and producers begin retaining female cattle as breeders where possible to begin the process of rebuilding. Compounding this is the lack of cattle coming up from Mexico. In a normal year, the US would import an average of 1.2 million cattle from Mexico, which would then go into feedlots and contribute to overall beef supply. This year, there has been a re-emergence of a parasite called New World screwworm in Mexico, which has meant that the US has put an import moratorium on cattle exports from Mexico. This has meant that, in addition to the decline in US production due to competition from breeders, there's an additional decline from the Mexican import situation. So all in all, this has led to lower production already and will lead to further production declines over the medium term. While there are many factors affecting Australian supply and demand, this is absolutely important because Australia both exports a lot to the United States and also competes with the US in a lot of our key markets.
Thanks for that, Tim. To wrap the global section up, let's talk about what's happening in Brazil.
So, firstly, on the production side, Brazilian production hit a record high in 2024, and over the first half of 2025 has beaten those records comfortably. With that high production, we've seen an increase in exports to 1.83 million tonnes in carcass weight terms over the first half of the year. Production is still growing, but more slowly than it has been in the past. So in the first half of the year, production rose 2% year on year to a record 5.1 million tonnes. This was driven by a 4% increase in cattle slaughter. And not due to carcass weights. Carcass weights have come down to the lowest level we've seen since 2019. This pace of slaughter has led to herd destocking, especially among female cattle, which means that as a result, Brazil's cattle herd has shrunk by an estimated 4% since 2023. Alongside high production, a relatively weak currency has contributed to higher exports, with domestic purchasing power weakening and exports making up a slightly higher percentage of total production when compared to the first half of 2024. So there have been high levels of production over 2024 and 25, but there are signs that this has been a seasonal peak and that production is likely to ease somewhat, either towards the end of this year or in 2026. Beyond the cyclical production dynamics, Brazil's market access conditions are changing after the World Organization for Animal Health recognised Brazil as being free of foot and mouth disease without vaccination. This is the highest form of certification available and makes it technically possible for Brazilian beef to meet the stringent technical market access requirements for some markets that were unavailable in the past. While Brazil might gain technical market access into some new markets as a result of this shift, it still lacks what we would call preferential market access, or the market access that comes from signing free trade deals. This means that the tariffs Brazil would face in new markets would be set at most favoured nation rates, which are usually higher than the rates you'd see in an FTA. As such, while Brazil's technical market access is likely to improve, it will not have the preferential access that comes from FTAs. And production is likely to have reached a cyclical peak this year and is likely to come down, either towards the end of 2025 or in 2026.
Thanks a lot, Tim. Moving on now. So we've now covered the size of the herd, supply, production capability, and demand. There is one more forecast figure to discuss, very important one. Aaron, can you please cover off where key industry analysts see cattle prices finishing up at the end of the year?
Yes, so MLA ourselves don't participate in price forecasting. However, the projections process and document have long been an opportunity for us to reach out to external analysts and provide an aggregate price forecast out a couple months, and in this case it is to the end of December 2025. If we look back at our aggregate forecasts from March, they landed just below where the market actually fell in June. A strong competitive market did push prices higher than anticipated, though the June price did land within the upper range for all indicators. This year, we had Bendigo Bank, Rabobank, ABARES, Mercado, and S&P all participate in this and provide forecasts, which we then pull together into an aggregated form for these figures. A huge thank you for those participants. We know this is a really popular part of the document. The volatility of the market over the last 2 months did result in a few varied responses from these participants, which have been aggregated to show a stable to easing movement of all indicators out to December. So for the National Young Cattle Indicator, or the NYCI, which is MLA's premier restocker indicator, analysts are expecting the indicator to land at 466 cents per kilo lightweight, with an upper range of 482 and a lower of 398. Moving down to the feeder steer indicator, that is expected to ease just slightly to 443 cents per kilo, with an upper above 500 cents at 501 and a lower at 399. And then for the heavy steer indicator, it's forecast to hit 397 cents per kilo live weight, with an upper of 438 and a lower of 355. We know stakeholders value these analyst forecasts, and again, we thank those participants.
Thanks a lot for that, Erin. Just on prices as well, these, again, as Erin mentioned, these aren't MLA's projections. These are collated by a number of analysts and presented in the report. So that's it for the content covered in the document. Again, encourage you to use the Slido QR code on the slide to put in any more questions you have for the team today. Got plenty of time for questions. While some more of those come through, good to see some in there already. Erin, can you please close out just with a quick summary of the key points of this document and what the future holds?
Of course, wrapping it up very, very quickly. The past 2 years of these mixed seasonal outcomes have highlighted the cattle sector's adaptability and working sort of as a national system. So Australia remains well positioned for record production and export volumes, supported by improved herd efficiency and processing capacity. Despite a level of uncertainty, the global beef trade outlook remains positive, and that's thanks to a period of high demand lining up, with Australia being very well placed to supply.
Thanks very much, Erin, and thank you everybody else for your insights today. We've got plenty of time for questions, so we'll kick off over on the Slido now. Just give me some time to get over to them now. Erin, might start up with your first one from our wonderful friend John Condon at Beef Central. Thank you for your question, John. Has anything changed with the herd size measurement methodology? What is it?
Yeah, so really briefly, we've gone through kind of that model process and explained how, I guess, industry is shifting. The dynamics of the herd is very different now compared to where it was a decade ago or even a decade before that. So when we do take into account these long-term trends like female slaughter rates and stock turn-off rates, we, I guess, are looking at them with a probably more of a shorter lens, because female turn-off now is very different to female turn-off prior. So the core of the model remains as it has been for the last, I think, 5 years, with that the University of Queensland peer-reviewed model system, though the assumptions that we put into that do have shifted, and then that's where these conversations with industry are really important as well. So I guess the foundation of it all is the same. It's just the weight that we put on some of these other data points has shifted. But it's definitely something that, as a team of analysts, we do want to look into. What is the true influence of female slaughter now and stock turn off, and then how can we kind of solidify that?
Sarah. I want to move on to maybe one for you, Tim. Very simple one. What markets will Australian beef, be exported to in the forecasted period?
So when we do the production and export, part of the forecast, we don't say specifically where it's going to go, because that's going to be driven by a whole bunch of factors: the exchange rate in Australia, the exchange rate in other places, relative economic performance and relative demand. What we can say is that from a kind of supply perspective, so if you imagine all the internationally available beef, kind of as in total, there's going to be relatively less of it, most likely, next year and in 2027 than there's been this year and the previous year. And that's because of that United States rebuild, the potential rebuild out of Brazil, and Australia, Brazil, and the United States make up 3 of the 4 biggest beef exporters in the world. And in terms of the markets that we primarily export to, the 3 biggest in almost all cases. So there'll be, that'll have a kind of positive effect in terms of the global supply demand balance. And what it means is that Australia is in a really, really good position to meet some of that demand and export more. And what has been really promising is that because Australia is really well regarded overseas, and because we have that kind of long-standing reputation as a beef exporter, because there's a lot of corporate knowledge in the industry, and because we've got a lot of kind of positive attributes that people around the world want, what we've found is that as exports have been rising this year, we've seen growth both in a lot of our kind of mainstay traditional markets, but also in lots of newer markets. We've seen exports rising all over the place. So it's difficult to say specifically where the beef is going to go, but what we can say is that the kind of demand supply outlook looks quite strong, and Australia is quite well positioned.
Fantastic. Thanks, Tim. Just want to shoot a question over to Emily on the female slaughter rate. Mentioned that the FSR of 47% or higher is no longer indicative of herd liquidation. Where do you believe the liquidation rate benchmark is now?
Yeah, thanks for the question. I think that we can't really tell when where exactly the liquidation rate is, but I think it's one of the tools that we have to see what producers are thinking, whether they're looking at processing more females or more males. And I think that's just a sign of where people are, where their decision making is coming from. But also we, look at the stock turnoff rate and kind of gain more information with what producers are wanting to do. But also another new data point is heifers on feed, which obviously in the US they get this information, and I think it's a really good tool to understand where producers where their minds are at, and essentially where what their decisions are for the season.
Thanks, Emily. While I have you, got another one on the female breeding herd is smaller. So what proof is there that the breeding herd is smaller?
So when I mentioned that the breeding herd is smaller, it's a proportion of the herd. So if you look over the last 10 years, the herd size is actually the same, but we're seeing more calves. So and as a result, when you do the maths, it looks like the female breeding herd is smaller. But the point of that was just to say that we have the herd that is the same size that it was 10 years ago, but we're able to produce more calves out of it. So that's obviously an indication of how productive and how efficient and that investment in genetics that has led to that bigger calf number, but from a smaller breeding herd compared to it's the same size from 10 years ago, but in proportion.
Okay, thank you for that. Miliana, I might go over your way for some live exports question. Got a question here saying that it seems that a few live trade markets are running a bit soft at the moment. What do you think could give exports a bit of a kick along?
Interesting one. So yeah, well, we think that the live trade is sort of like demand driven. So one of the things is like if the economy in the markets in the Southeast Asia and other markets gets better and improve, that will boost demand for live animals. But also it would be like there are things that are out of our predictions, such as the Middle East war, the Israel war. Israel used to be like the 4th largest market and just stopped because of the war. So if that gets resolved, that will boost demand probably into that market. Also, the other thing is this industry is quite price sensitive. So we need that the prices stay at competitive levels for the demand kick along. So we believe that we need like affordable prices here to compete in the market, because in some of the markets like Indo, there is a bunch of frozen Indian buffalo meat that compete with the Aussie meat with the live cattle meat in the wet markets. So it has to remain competitive in those in that end to keep the demand flowing. And we know that the Aussie cattle is well regarded on the markets, and the demand is there, but it has to be at good prices.
Thanks, Emiliano. Before I jump to another live export question for you, just a reminder to use the Slido link to ask your questions. Putting your hand up in this meeting, we are actually unable to unmute you to get you to ask this question. Just the way that this Teams link has been set up, so I need to use the QR code. Just going on to another live X one for you, Emiliano. Will ASEAN remain a key target market for live cattle exports? That's beyond Vietnam and Indonesia.
Indo is the biggest market by far. Vietnam is the second one. Then is China, which is the biggest market for breeders, which is quite subdued in the last few years due to, as I say, the dairy sector struggling. Then, as I mentioned, Israel was a big one, was the fourth, but it's not anymore in the game at the moment. So some small markets like the Philippines has been growing. Now it's quite strong, but it's still like smaller than the big three. And then there are other Middle East markets such as Jordan, and a few others in there that has small volumes, but overall they do good volumes for the industry. But nowadays the trade is highly concentrated in Indonesia, which accounts for 70% of the export, at least this year. But it's because a few other markets has been a bit subdued due to economic or any other other reasons. But yeah.
Thank you for that, Emiliano. Wanted to shoot back over to the global markets. Tim, with the current size of the herd and the past 5 years of good seasons, is there a concern about a beef slump situation arising, particularly when the US comes back online?
So not particularly, and particularly when we're thinking about a beef slump, usually you'd be thinking about, what happened in the 70s, and that was a radically different sort of global market situation. It was prior to the formation of the World Trade Organization, and so trade could very much be kind of turned on and off in a way that it couldn't now, and it wouldn't be now. So the world's quite different. Everything else aside, it'd just look really different if we had higher production to what we saw back in the 70s. With that said, to take your point about what happens when the US comes back online, the first point to make is that is likely to be some years away. Their herd is at the lowest that it's been in over 70 years, and it will take some amount of time for the cattle population to rebuild and production to get back up there. We're only just seeing the beginning signs of a rebuild now. It's not like there's a full-fledged rebuild on yet. So that's likely to be some time. And we've observed that historically, it's often the case that when American production is peaking, Australian production is relatively low, and vice versa is also true. And we're seeing that now with American production coming down while Australian production is very high. But we also saw it in, say, 2022, when Australia had quite low beef exports and the US had very high beef exports. So there is that balancing. And the final point I'd make is that over the slightly longer term, what we're seeing is a continued demand, like growth in demand for animal protein generally, for beef specifically, and then for Australian beef more specifically, because as the number of people in kind of emerging markets and some newer markets, as the number of people that are making enough money to afford it grows, those people tend to eat more protein and more beef. And they're looking for a lot of the traits that Australian beef has in terms of the kind of safety and the traceability, and the consistency and the quality. And because Australia, has those long-term relationships, and because the industry has positioned itself really well across a whole bunch of traits that consumers really want, as that demographic of people that can afford to eat beef grows, and as they can afford to eat more, that kind of creates this demand opportunity, which Australia is well positioned to take advantage of. So kind of in that longer term, that growth in that consumer base will be really important to the Australian industry.
Great, thanks, Tim. Before I shoot to a couple of questions on feedlots, I did notice one in there about the EU land use rules. I'll read out the question. It's how is the upcoming EU land use rules impacting growers? Are they going to be ready to meet requirements, and how can MLA assist? There's a couple of questions in that which I can tackle. So we haven't incorporated potential impacts of the EU land use rules within these projections. It's kind of an unknown commodity, particularly here, but also how it may impact other competitive markets. What I would encourage, what is particularly encouraging to note, though, is that the European Union has classified Australia as low risk, as a low risk deforestation outcomes, which is encouraging to see. What I'd encourage those on the call and other producers to have a look at is Integrity Systems Company, our subsidiary company, has a great page on LPA geolocation to ensure that access to the EU is located for your business. So make sure to have a look at that. We'll send through links post this call as well. Following that, could we now shoot over to you, Erin, on Australian feedlots? One from David here. What is the annual throughput of cattle in Australian feedlots, and what percentage of that compromises the 9 million cattle slaughtered in Australia each year?
Yep. So each quarter, MLA publish a quarterly lot feeding brief using the Australian Lot Feeders Association, or ALFA's feedlot survey. So we get all these turn-off figures from that, and it's all housed on our website, which is a really good bit of information. So in the last 12 months, we turned off 5.5 million animals from feedlots, or NFAS accredited feedlots, which comprised of around 38% of total turn-off across that financial year. This is strong. It's record turn-off for sure. We've seen consistent growth over the last, I think, 7 or 8 quarters in feedlot capacity numbers on feed and that turn-off capability. The 38% is somewhat lower because of all of these grass-fed animals coming through at the same time. But yeah, 38% of total turn-off, and then we do an internal calculation to cover production volumes, because obviously the animal coming out of a feedlot has a very different weight to, or produces more beef than an animal coming off of grass in some cases. So production is estimated at around 42% of total production would be grain-fed beef. But yeah, a really important part of the sector, and a really important part of, I think, that production stability and production capability outlook into the future.
Thanks, Erin. Again, while I have you, what's the growth in feedlots going to do for our production ability?
Yeah, probably links to that. When we see consistent numbers on feed increasing, that's an indication that there will be that'll impact total average carcass weight, which then your average carcass weight against slaughter results in production. So when you've got more animals coming off of feed, you're going to have more production because they're larger. So yeah.
Thanks, Erin. Sorry, I'm going to have one more for you.
Yes.
There's a couple on domestic, on the domestic demand. On the domestic market, beef market. So it's great that we're seeing strong demand for exports. Is that strength in demand also reflected domestically? And sort of with that, like what impact do these forecasters make on the domestic market? And considering things like inflation and the rising retail beef price.
Yeah. Okay. So I'm going to go down the consumption line. So Australia is a really strong consumer of beef. We consistently consume a lot based on production. So that sort of domestic consumption has remained relatively flat for quite a long time. We are a majority exporter. We export, Tim will be able to correct me, but over 70% of what we produce. So anything that isn't consumed domestically, thanks Tim, does go into that export market. But I think yeah, it's a relatively stable figure based off of production. I don't know if Tim has any more to add on top of that.
Well, just to say that, like we're saying, kind of total consumption in tons in the forecast is staying relatively steady as it has for quite a while. But I think just on the demand side, what we've seen is that kind of consumer demand, I guess enthusiasm for beef in Australia is really strong at the moment. Lots of people really enjoy eating it. And like you said, even with kind of prices moving around, consumption has stayed pretty robust and pretty strong. And so I think what that shows, like Aaron was saying, Australia is a country that consumes quite a bit of beef relative to global averages. And we have demand and enthusiasm for beef in the market, in the domestic market, has been quite strong, and we expect that to continue.
Thanks for that, Tim. We've got a couple of minutes now. I've got a couple more questions to go, so I'll try and keep them very quick. Kind of covered this a bit before, but Emily, can just responding to the question on the recent ABS report about the FSR being at around 54%. Herd composition's changed a lot. Does this mean that we couldn't judge liquidation cycle by this factor?
I think that the herd has structurally changed. I think it's a tool, one of the tools that we can use to see how what producers' decisions are. I think the FSR continues to be a good indicator, but I think as we get more data points, as I previously mentioned, like heifers on feed, that will also be another interesting point where you get to know what producers are thinking. That's also when the number of cattle they're turning off and putting onto feed, and that can also be another point that you use to understand whether we're entering a liquidation or I think that now when you've got more you've got more options, right? You don't only have to turn them off, you can put them on feed. So it's understanding, it's another tool in the toolbox and understanding what producers' decisions are.
Great. Sorry, I'll just grab myself on here. Thanks, Emily.
No worries.
We've got probably time for one more question, just from Clint from Campbell. Thank you for your question. Does MLA publish a variance to forecast on the aggregated industry forecast from previous updates so we can see historically if they were close? Maybe that one for you, Aaron.
We don't have any sort of published figure out there, but we are well and truly more than happy to pull that together and share that. I think the last round of forecasts that we did, we got slaughter and production within 3% from memory, which is really successful. And then if we look at the herd size, that is just a bit of a delayed data point from ABS. But yeah, please get in touch through the emails on, I guess, that initial slide that we had. We'll send out these slide decks and you'll get all of our contact details and we can answer any questions like this and any questions that were missed.
Thanks, Aaron. Conscious we're at time, so thank you very much. Plenty of questions still coming through, which is grand. So while we haven't been able to answer all of them today, just in the interest of time, please get in touch if you have any further unanswered questions, and we'll be able to get back to you. Conscious a lot of these ones are coming in as anonymous, so we can't answer you directly, but please get in touch with the team and we'll do our best to answer those. So that brings today's webinar to an end. Thanks for your time. Thank you to Steve, Aaron, Emily, and Tim for their contributions. Using that QR code as well, there's also an option to provide feedback, and there will also be a form emailed to you after the closure of this webinar. We'd really like to continue to use these webinars to share our insights. So providing that feedback, you'll be able to shape the future of these events. Again, as I said at the start, the recording of this webinar will be made available shortly, which will be accessed via MLA's website or via our YouTube channel. Please get in touch if you have any questions or would like the access to our slides we presented today. We'd be more than happy to share them. Thank you very much for your time this morning. Enjoy your day, and we'll catch you next time. Thank you.